Alright everyone. Good afternoon, good morning, wherever you may be in the world. My name is John Paul. Just a quick sound check, making sure that you are able to hear me. Andre, Chuck, Doug, Rick, Steve, Victor. Alright, very good. Happy New Year to everyone. Fantastic, Andre. Thank you. Very good, very good. Alright, what I want to do today, I want to talk a little bit about I think the last time that we did a webinar, I promised that I was going to, hey Chuck, I promised that I was going to explain to you how the ABC pattern works and what it's all about. I think there was a little bit of a technical difficulty on my side last time we met, right before the New Year, so I'd just like to continue where we left off. Alright, what I see right now here is pretty straightforward. An Atlas line trade here to go short at 1264, right? About 2 points, right? I mean, there's no mystery here. Those of you who have the Atlas line know the rules. We all have the same exact entry, as far as maybe by a tick or two, maybe off by a tick or two, but as far as how the Atlas line works in this specific short trade, it's pretty straightforward. There's no mystery here. Anyone have any questions on what you're seeing here as far as the Atlas line trade? Alright, Chuck. Very good. And also for the, let's see if I can stretch this out a little bit. Here is the Euro as well. Euro is market that when the E-Mini is slow, the year start off pretty slow. Here is the Atlas line for the Euro, short trade at 1280. I'm sorry, 2811. 2811 on the Euro. All right, and it's about a 11 tick trade. 11 tick trade here. 11 tick profit target. All right. So what I'm going to go over today is I'm not going to go over Atlas line trades and charts. I did that a little bit last time. What I'm going to do is I'm going to explain to you how the ABC pattern works, and I'm going to show you how we can use this every single day in any market that you trade. Morning, Jack. Jacques. I'm sorry, Jacques. And so that's what I'd like to cover this morning. Short on the E-Mini is currently what is happening, and let's take a look at yesterday on the Atlas line. Those of you who are asking, Atlas line had started off on the E-Mini with a long trade, which did not work, followed by a short trade, and followed by a long trade here. Alright, and then you have strength trades here and strength trades here to go short again, to go long again here. So this is yesterday on the E-Mini S&P. Alright. On overnight, you guys are asking about overnight. Let me show you Atlas. Let me add another Atlas line here to my chart and quickly just show you overnight. There's a lot of international traders that I work with, and when I'm asleep, you guys are trading the European market or the Asian market. And so let's take a look at overnight. Did I add it here? Let me take a look here. Atlas line, 3 o'clock in the morning. All right, let's take a look. There it is. Okay, and here is the overnight last night. What the Atlas line gave you as far as a short trade on the E-Mini. right here, and then you have pullback trades, and you have strength trades as well right there. Right there's another pullback, another strength trade right here. Okay, so definitely there were some opportunities overnight. I'm sleeping. I'm in Eastern Standard Time Zone, so I can't trade during those hours. I'm sleeping. All right. Okay, so let me take off the well, market's tanking here, huh? Victor, morning, Victor. Victor says here, excuse me, but what was the Euro futures on Forex? Well, whether it be futures or Forex, here is the Euro using the Atlas line here. See if I can adjust this a little bit better. Scale off. All right. Maybe that's going to be a little bit better. There we go. Okay. So here is the Euro, and whether you trade the Forex version of the Euro or the futures version, the markets work so close together as far as they go up and they go down together that you can put the Atlas line on either one. You're going to get the same results. You do need 24-hour data for the Atlas line to create its calculation. It can be used on Forex, Victor. It can, yes, but it needs 24-hour data. All right, and so whether you want to trade the U.S. Open here, or you want to trade the overnight, here's the overnight. I'm not sure if you're international, Victor. Here is the Atlas line for overnight. When the Life Exchange in London opens, here is the result from 3 o'clock my time, which is 8 o'clock London time. Life Exchange opening bell. Here's the Euro short. And if you want to look at yesterday, here is yesterday. On the Euro, this is the 4th, January 4th on the Euro. Short and then long, right? And really not any surprises here. And overnight on the Euro, there was a nice short trade here. All right. Oh, Colorado. All right, Colorado. All right, very good, Victor. All right. All right, so what I'm going to do is I'm going to remove the Euro chart, and just so you have a basis of profit targets and stops, see a few questions coming in. How do you manage the trade? I like to keep it as simple as possible. A lot of traders overcomplicate everything. And so in keeping it simple, I want to have a prove-it stop, a catastrophic stop, and a time-based stop, whichever happens first, I take the stop. If you're just trading with one stop, you're just waiting for that one stop to be hit. I really prefer to have a little bit of diversity, and if the market proves to me I shouldn't be there, I want to get out. If the market takes forever to hit my profit or my stop, I want to get out of there. And if something occurs in the world that I'm unprepared for, I should have some type of catastrophic stop in place that I'm able to protect my account. So I use those 3 stops to manage the trade. As far as the profit target goes, if you see down here, I use the ATR, the average true range. And if you've watched some of my videos, if you heard me in other webinars talk about the ATR, in my opinion, I need to know what is occurring now, not what occurred a few hours ago or a few days ago. And so the current market conditions, the current ATR, is telling me that I'm able to achieve 2 points, or 2.5 points currently. So if I enter a trade short right now, the market should give me 2.5 points based on the current market conditions. And the ATR is telling me that. I use a parameter of 4, a period of 4 on the ATR, because I'm really just concentrating on what's happened in the last 4 bars, or the last 20 minutes. And so when I think about how much profit I should take, as well as stop as well, I need to absolutely consider what's happening now. All right? Not what I think may occur or what I hope the market's going to go to. It's moved 2.5 points of a range within the last 20 minutes. I can expect that at least to continue, and that's what I'm after. All right? So if you have any questions on using the ATR, I recommend you taking a look at some of the videos I have out there. I think I explain it in a lot more detail than I just did, but really it's a measure of the current market conditions. All right? Very important to me. I live and die by it, and so this is extremely important to be versatile with each trade. If the market's volatile, I want to take more. If the market's dead, I don't want to trade, or I want to take much less based on the current market conditions. All right? I don't use more than one time trade, Victor. I just use a 5-minute chart. I'm not looking at anything else. I'm not looking at an hourly, a 15-minute, nothing. Just a 5-minute chart. I have everything I need right here. All right? So let me take off the Atlas line here off my chart. I'll take off the pit session, and I'll take off the overnight session as well. And I'm going to go with a nice clean chart. In my opinion, it's exactly what I like to see. Simplicity, right? So each and every day, I do not want to have a bias on where the market is going. Regardless of what is happening out in the trading world, I don't want to have a bias. I instead want to just rely on the price and the price action and the candles. And when I look at each trading day, and actually you can apply this to any market, and I actually go to yesterday because yesterday was a full day. All right. When I look at a trading day, I want to start off with a clean slate. And so I start off with having understanding that the first part of any market, the first 2.5 hours, are the best times to trade. And I'm going to outline that area. And I'm going to say, I'm going to place a vertical line right here, a vertical line at 12 o'clock, like so. And I'm going to outline this area to me being the first 2.5 hours, first 2.5 hours of the day. All right, first 2.5 hours of the day, and I call that the A part of the day. Okay, call it the A part of the day. And the A part of the day, to me, is where I see a lot of action. Right? You can see that the range of these bars are the highest in the A part of the day, and typically this is normal. And so I want to have an understanding that if I'm going to trade any part of any market, it should be the first 2.5 hours, because this is where it's at, right? Whether it be the London Open, the Asian Open, the US Open, this is where I'm looking at opportunities. All right. Anthony says here, a quick question here. Anthony says, John, the Atlas line signal usually comes out 5 minutes before the news. Should we trade it or wait for after news? I'm not big on trading the news event, right? I don't want to have a bias, long or short. So no, I don't have an opportunity to trade or bracket to trade like some traders do right before the news event. So I recommend not trading right before a news event. But if you're able to trade prior to the news event, before it comes out, and get out when the report hits, I recommend it. And then wait 5-10 minutes, and if everything gets back to normal, Anthony, as far as the market's not chaotically volatile, then you can go back and enter the market long or short. But I don't recommend jumping in because the market can move easily 5-10 points in either direction, up or down. I'm trying to avoid that, getting caught up with that chaos. All right, I rather trade when it's normal than these chaotic up and down 10-point moves that a lot of traders get knocked out and their slippage and all that. All right. So the A part of the day in any market, Forex, Euro, Russell, crude, whatever, doesn't matter, gold, opportunities are where it's at. All right. So this is the expectation. So I want everyone to have this expectation of the A part of the day. Now, when you're looking at the B part of the day, which is the next 2.5 hours, right? I have an expectation as well. My expectation is that the market is not going to do much of anything. And if you've been trading for any amount of time, you've probably heard the saying, it's lunchtime, right? And lunchtime, it's best to stay out of the market. Well, in the trading community, not everyone is having lunch the same time as the guys that live in the US, right? At 12 o'clock Eastern Standard. You have a lot of Australian traders, you have a lot of German traders, London traders, Asian traders, right? And so that thinking that it's lunchtime is not entirely true. But what is true is that the market typically does slow down, and it does start to whipsaw and channel at the B part of the day, 12 o'clock to about 2:30 to 14:30 here. And so I want you to have the thinking that the expectation is going to be this market's not going to do much of anything. Typically, 80-85% of the time, this is true. And so I think of the B part of the day, just put here a B, the B part of the day, my expectation is that the market's not going to do much. Now, the reason why this occurs is not because we're all having lunch or eating. It's because swing traders, systems, position traders have already positioned themselves here for the day, in the A part of the day. They're in the market here. And so there's no follow-through in the B part of the day unless there is something else, a news event or some other factor that may occur, some catastrophe or something. But typically, all the orders, most orders for systems are placed day session, not 24-hour overnight, because there has to be, there's a rule that brokers need to be in their office whenever there's a trading system currently trading overnight. And so most traders are not 24 hours, most are not, and therefore they initiate systems which are based on day session or pit session only. And that's why you see an influx of systems working on day session only, because of that rule that the brokers need to be in the office monitoring each and every trade as they occur. And so systems typically get in or get out. If there's gaps, they get stopped out when the market opens. And that's why you see not just systems, but you see an influx of larger volatility and movement in the A part of the day, and it doesn't follow through into the B part of the day. All right? Now, so if the expectation in A is that we have some action, and B is going to be a slow whipsaw channel type of day, then I'm going to say to you that we should be looking for an opportunity when the market does not do what we expect. when the market does something other than what's to be expected of this channeling and whipsawing. And so yesterday, as an example, typically, and this is, remember, any market that you look at, the rules do not change. It's price action. It's the same. This is the range of the first part of the day, of the A part of the day. I would expect moving forward into B, 80-85% of the time, we're going to get stuck here. Price is going to be unable to trade above or below the range of A. This is common. But when it doesn't, and it actually pushes beyond the range of A, right there and then, I want you to say to yourself, aha, it's doing something different. It's not doing what it typically does, and you have the onset of a trade, and typically this turns out to be the start and the first clue to a trending day. And you may look at a day that you said, wow, what a great day it trended. If I would have bought in the morning and I would have got out at the end of the day, it would have been fantastic. But it's very difficult to catch it when it's happening. This is the opportunity that you could see it happening. Price is proving, right? We're not using any indicator or moving averages or anything. We're allowing price to prove that it's now in B doing something that it normally doesn't do. It's breaking out of the range of A, and when you see two consecutive candles or bars closing outside the range of A, you have a trade. Either long or short, you have a trade. And so if you look at this yesterday, you have here, let me just expand this here a little bit. You have candle number 1, close outside, and you have candle number 2, close outside. It's objective, it's mechanical, there's no thinking involved here. Excuse me, we have 2 consecutive closings that occurred above the range of A. Now you have, it would look like this here. Now you have the ticket to say we're going to have a trending day. Typically the day will end much higher. And this works in any market, whether it be whatever, euro, Australian dollar, oil or gold. You have the clue that tells you the day is going to be much higher. And so if you want to take a look at the average true range like I do, and I say, you know, I'm probably going to get a point and a quarter out of this trade, and then I can trail it or I can hold it, but at minimum the current market conditions would be an opportunity for you to get. It's very slow, point and a quarter. And the market never looked back. It never came back down within the range of A. It did over here for a little bit, but kept on going higher. Now what I want to do is take the same principle that I just showed you, and the reason why I call it A, B, and C is because this is the C part of the day. And I'm going to take the same information that I just used to relate the A to B, I'm going to do from B to C. Because if there is a late day rally or late day sell-off, you have the clue to tell you that. And the clue is that 2 consecutive closings above or below sets off a fury of trades into the last part of the day. And so if you're looking for that late day rally for the last hour or the late day sell-off that sometimes occurs, you're going to be able to catch it using price action. Alright, and so here, moving into the future here, do we have two consecutive closings occurring above the range of B? Right? Two consecutive closings. Do we have that over here? For us to go long? What do you think, guys? No, right? We don't. We have a gap open, we have one close, and then we have a close down. So we do not have two consecutive closings. All right. Now, this typically has to occur within the first hour or hour and a half of B, or the first really half hour, I should say, or hour of C. So I'm going to break this in half, and I'm going to say this has to show me that it's breaking out pretty soon, as soon as B starts to plot, or pretty soon as soon as C starts to plot. Because if it happens towards the end of this area B, or the end of C, it's not worth trading. Okay? It's not worth trading. Alright? So let me show you another example of this. And you guys can absolutely go back and look at your charts and look at any market that you want. Whenever it starts, if it happens to start at the London Open at 3 o'clock in the morning, if it's a Euro or a FTSE or a Eurostoxx 50 or a DAX or bonds or whatever, you're going to see the pattern occur over and over, the same relationship. And this is January 3rd. Okay, so January 3rd we have 9:30 to 12 o'clock, right? And so what do I expect here in the A part of the day? What do I expect, guys, in the A part of the day? Action, right? I expect some type of volatility to get me to where I want to be, right? Some movement. And so here we have the range of A, right? Here we have, moving into the future, this is B, from 12 o'clock to 14:30. We have 1, 2. Actually, let me put this here. Do you see the opportunity to go short at 1272.50 entry price here? Well, as soon as this candle number 2 closes, Victor, this candle number 2 closes, the direction you want to go in is short. So as soon as this candle number 2 closes, I want to go short, because we had two consecutive closings below the range of A, and this gave you the opportunity to go short. So you would enter either on the open of this candle or at the close of this candle, but you go short. The profit target, about 1 3/4, almost 2 points. Even if you want to be more conservative, 1.5. This is at least what I recommend you go for. And so 1272.50, 1271.50, 1271, 1270. So it went more than 2 points here. Yeah, then you're fine. Close the second candle. Correct, Victor. Correct. All right. Now, I want to take the same information and give me a plot possibly in C, right? Who knows? Maybe we'll have an opportunity in the C part of the day. And so I'm going to take what happened in B and say if there is two consecutive closings above or below the range of B, we have a late day rally or a late day sell-off. And so did we have one here on January 3rd? Nothing. Right, nothing. You're going to see that C, 85% is contained within the range of A. The same thing that you're going to see that the B is typically contained within the range of A. Questions, guys? Let's take a look at what's happening here. Currently, we have 9:30 and 12 o'clock. Whatever this range is, moving forward into the future, when B rolls around, you're going to look when A finishes, plotting. You're going to look for today. You're going to look for the opportunity for this to occur or this to occur. But remember, what's typical is that it stays within the range of A. That's what you're going to expect. So whether you want to play the support and resistance game, or you want to channel trade knowing this information, or you wait looking for a day that's trending, catch it early on. Alright? But typically B will be stuck, the range will be stuck in what happened in A. Alright? Let's take a look here at the Atlas line. Okay, so according to the rules of the Atlas line here, this may be a long trade here, right? May get to see a long trade. You had a 1264, about 2 1/4 points, 1262, 1260, 175. So you were able to make your 2 1/4 points, 2 points to the downside. So if we have 2 consecutive candles now that are going to close above the Atlas line, you're going to go long. This may in fact turn out to be maybe a bounce trade, right? If the market comes down, you get a trade to go short. I'll turn them on. True. Right? So if this happens to bounce off the Atlas line as support and resistance, the opportunity to go short is there as well. Alright? Any questions, guys? Alright? Now, close, Chuck. The close of the candle. As soon as the candle closes, it hit resistance, you go short. That's when you would go short the bounce trade. Just one candle. Okay. I explained, Victor, how these. Well, see now, if you saw it, I'm not sure if you saw it, but it just popped up there. Bounce short, right there. To go short. The Atlas line, black box. The Atlas line is black box. I explained to you how these orders are configured. I do a one-on-one webinar with everyone who purchases the Atlas line. It's recorded, and so you're able to watch the recording. I explain to you pullback trades. I explain to you strength trades, all based off of price as it relates to the Atlas line. Okay. Jacques' question. The Atlas line does act as support and resistance. That's correct. Correct. My favorite trades by far are the double bar short and double bar long. Absolutely. They are my favorite. They are my favorite. The bounce trades, we get a lot of bounce trades. So I want to pick and choose the ones that really make the most amount of sense. So with the bounce trades, I always look for a red bar in order to go short, a lower close than open, as a filter. Simple filter, make sure it's a red bar to go short, and if it's bouncing to the long side, make sure it's a green candle, higher close than open to go long. And all this is explained during the webinar that I give on how to manage and to trade price when using the Atlas line. Jock says here, could you go short if you have two closes above the Atlas line after you did one trade? Well, if you're above the Atlas line, above it, that means that for the most part, if you're just using the Atlas line, the thinking is that you want to take long trades. So no, you would not go short if you have if you're above the Atlas line, unless you're using something else to tell you to go short. But the bias would be if it's below, prices below the Atlas line, I want to trade short or take short trades. If we're below, I want to take short. If we're above, I want to take long trades. Okay? Okay, you're welcome. Alright? 2 points. Yeah, 2 points looks good. 64, 62. Right? 64 quarter, 62 quarter. This is where I would assume the market will lead to. Alright? Have you guys watched any of my recent videos and education webinars? Any thoughts on that? I have so many videos out there on the web, and a lot of it is explaining to you and showing you how I trade, how to trade price. If you haven't yet watched the videos that are out there, if you're interested in learning a little bit on how I trade the price, I recommend you guys taking a look at the videos that I have out there. Alright. Hey Nathan, good morning. Alright. You're welcome, Jax. Alright. The year started off, in my opinion, kind of slow, but don't worry. I believe that... Fantastic, Andre. Good job. I believe that this is going to pick up. And so, definitely, we're looking at very slow action as the first week of the year, but fear not, where volatility is coming. It may take a couple days, I believe, for everybody to get back in the swing of things, but I expect the market to pick up a little bit, all markets. I also would like to say that I believe that the year, this year, 2012, will end higher than what you see here at 1265 or 1270. You're going to see an up year this year, according to what I've seen. Yeah, YouTube, Bob, or even Bob, if you go to my website, DayTradeToWin.com, Bob, if you go to the video section, right, you're going to see the last 50 videos that I did, right? So check out the DayTradeToWin.com website, and then click on the videos menu on the top, and there's a button there called videos, and then there's, every time I do a video, it gets put there. All right. Okay, very good. Yeah, so I would have to say that the year will end much higher than what you currently see. And I'm going to tell you, as far as the years that I've been trading, how that becomes a clear determination is if January, the first month of the year, is a higher close than open. If January of each and every year, if it's ever a higher close than open, the year always ends higher. Just a little tidbit of information, of analysis that we used to do. We always used to look at the month of January to determine, as a predictor, if the year was going to be an up year or down year, and it's very accurate. All right. Yeah, so if you have any questions, please email me at support@DayTradeToWin.com. I have a class starting tonight. If you're interested in joining the group, please let me know. Charles, I will email you later today for our schedule. Nathan, I will see you at 6 o'clock this evening. And if anyone has any questions on what you've seen here, or on the Atlas line or anything, I do get a lot of email, and so give me a day or so to respond, or you can always call the toll-free number if you want to talk to Nate, who is my assistant, who takes care of questions if you have any questions. All right, that's the toll-free number. All right, guys, have a great rest of the week, and I'll see you guys next week. Bye-bye now.